Mark Selby, how you doing, sir?
Matthew Gordon, very good to see you in our little weekly chats.
This is the third time this week we've spoken. People don't know this, but I'm going to admit to it. The third time we've spoken this week. So we talked about your company, right? And then we're gonna do a thing with the crikey, what are they called with Boyd? What's their operation called?
Metsoc and CIM.
Yeah, and CIM. Okay, Metsoc and CIM for people who don't understand this. These. Well, you tell us about it. Go on. What are they doing?
Yeah, so these are basically some very large technical organizations in Canada and North America. So literally, most metallurgists, mineral processors, and a lot of mining engineers, geologists belong to one of the societies, depending on what side of the processing spectrum on. They normally have these, big multi-day conferences, but we're looking at actually, putting together an online workshop, that would appeal not just to the technical folks, but a much broader audience. So, that is something that is in progress there. So,
what side of the technical spectrum they're on? I've met some of these geologists. I know what side of the spectrum they're on. I really do. So I have to talk to these guys weekly.
Yep.
Scary, intelligent, and scary. But what we'd been talking before Christmas, right? And we were talking about some of the players in the market, some of the people in the market who go in and help companies, big companies, fix problems technically. And Boyd is one of those guys.
Yeah, no, he's a hidden gem. So he did all the very in early stage roasting work for us with Dumont, which Qingshan built 2 of these based on that lab scale work that Boyd did, like 8 years ago. And then he's working right now on us, working with us on making some net zero metal. But, his client list is a very big blue chip list of clients who come to him with, technical problems that their in-house people are struggling to solve. And the great thing with him is, if I had, basically invested on, Boyd calling BS or giving big thumbs up to kind of new process ideas that people come up with, I might not be having to do this weekly thing with you. Because, he's just very insightful in terms of, understanding, what's real and what's fake. So I think people will definitely get a lot out of it. So
well, that's the point of this. So advanced warning, we're going to do something in the next few weeks. Going to set it up, quite a big thing actually. So we're going to not just look at the technicals, so people can understand a little bit more about nickel. We're talking about nickel in this case, but obviously Boyd deals with lithium and all sorts of complex metals.
Rare earth metals, you name it.
He's an insanely bright guy. But this one we're going to focus on nickel, and we're going to structure it so that we get a lot more of the so what out of it. So and what I mean by that is that we're going to talk some technical. We're going to try and interpret that. And then, so what does that mean for investors? So what should you be thinking? What should you be looking at for our basically our red flags and green lights elements? Yeah. So it'll be pretty fulsome and I think inclusive there for lots of investors.
Yeah, because I think for, a lot of people, if you've been a mining investor for a long time, you kind of understand, again, in terms of gold, silver, and copper, you sort of probably looked at enough things that you kind of have some sense of what's good or bad and the key things to focus in on. And with nickel, that's what we've been trying to do with this weekly series is really help on that front. But, the reality is there haven't been, 150 different nickel plays to look at in the last 10 years. So, we want to educate people in terms of, this as a metal, why aren't there 150 things to look at, and then, why have there been some pretty spectacular failures and there's some space and then some pretty spectacular successes. So, and hopefully, help people sort out between both of those. So.
Yeah. I think, well, I hope it's good. I hope people like it because, you say, for you guys, you and me talking on a weekly basis and banging on about a topic per week is great. It's, collectively a big volume of work. But it's not just us, not just, you're thinking. There's a raft of people that are coming on board for this 2-day session we're going to do who also feel the same way, who have got the experience, have seen these spectacular, because I tell you what, when nickel or copper goes wrong, it really goes wrong. There's a lot of money. Money wasted, right? So, they've seen it before in all of these cycles. And there's some, whether it be the little companies, the sorts of, we talked about some of the games that are played, some of the commentary which is put out there, but you've got to interpret that and you've got to understand. So I want to maybe, give everyone a bit more access to all of those experts who will talk the language, will skew it towards what it means for investors, because those are the guys who lose the money at the end of the day, right? Whether they be fund managers, family offices, high net worths, or retail, it's your money.
Yeah. Oh no. And that's the part is, when someone says, oh, this is new process, but it's guaranteed to work. We've proven it all at a lab scale, and scaling it up by 1,000x won't be any issue at all. And I always remind people that every spectacular process failure was a spectacular success at a lab scale. So
yeah, I've seen a couple this week actually. It's like they're going out to market and say we've cracked it, and you get into the headline. I think someone sent me one this morning in the club saying we've produced battery grade lithium in the UK, and then you read it. It's a government sponsored project at lab from a very small lithium. I think it was Cornish Lithium. I think was the company. Nice guy. Really nice guy, and his wife, I think, also in the mining game. Nice people, but it's some ways off. The government sort of set these ridiculous targets of how much is going to be sourced domestically. And now we're outside of the EU. I'm trying to work out what that means.
Right.
Okay.
Yeah.
So we're relying on an old Cornish mine in the UK. I'm slightly nervous, but there we go. But that's the point of all of this. It's all in the details. So it should be a good session. I hope it is.
Sure.
Anyway. Right. Should we do our thing? Should we talk nickel?
Let's talk nickel.
Okay.
As always, never a dull week. A few little exciting little bits. So
yeah, we've got a few things we're going to talk about here. So what's happening in the market first of all? What's pricing doing?
Yeah, so nickel sideways week, but near multi-year highs, which is not a bad place to spend some time going sideways. So in the $8.15 to $8.20 a pound range, up over $18,000 a ton for those of you on a per ton basis. So again, nickel's been following along with copper and some of the other metals that are bouncing up against these multi-year highs. And again, typically, once you break through a level, then you can often spend, a good chunk of time above that level. So we'll see. Last week I would say I was less bullish than I am this week. There's been some more signs out of China that, things are a little more tighter than some of the data a month ago might have suggested. So what emerged this week is a temporary backwardation in nickel prices in China. So, what that means is for those of you who aren't familiar. So most of the time prices are in what's called contango. So, metal, the price in the future is higher than, today's price. But when you have near-term shortages, and that, again, it's always a sign that there's some near-term shortage if the price in the short term is higher than the price in the longer term. And that emerged briefly this week in China. There was a couple of things that sort of caused that to happen. One is inventories dropped 7% in a week. They're down, 1,500 ton drop to just 23,000 tons. And again, we're at multi-year lows. This is pure metal inventory.
Why so much? I mean, that's an amazing drop. Is this because of the way that they report, or are they genuinely kind of going through this as part of their infrastructure project?
Well, again, we're going into, we talked about last week that we are seeing some strength on the battery side, which pulls more briquettes into that part of the business. In terms of, the overall, non-stainless uses, that's continued to grow pretty well. And, what's happened is with Chinese New Year coming up, where it's kind of things shut down for 3 or 4 weeks. And this is why I'm getting more slightly bullish, is that you're seeing, people come into the market, say, oh, you know what? I'd rather have a little more than a little less heading into Chinese New Year, just because I'm not sure sort of how strong the market's going to emerge. So again, when people start to do this, that's a good sign that they're seeing, enough strength in their order books, enough visibility on demand that, again, I'd rather have a little extra, than a little less. So again, enough people do that. And all of a sudden you see these, kind of sharp inventory drawdowns. Again, premiums for all of the metals on the ground there of the different classes, have all gone up. And what happened was, the import window. So, that you made money by buying nickel on the LME and bringing it into China opened for the first time in early 2020. China, unlike, other metals that swing open much more frequently, with nickel, because the Chinese can't export NPI, it traditionally trades, at a discount. So, so no, that strength in the non-stainless side is pretty encouraging.
Okay, should we talk just briefly? What's happening in the old triangle there in terms of relations in Philippines, Indonesia, and China?
Yeah, and so that's where China.
Goodbye, that was it's the last time I'll say it, but because today's the day he left the grounds.
Yeah. Oh no! If everyone watching the clip, one of the more, I think, surreal moments so far is watching him get on the plane with Macho Man by the Village People playing in the back.
I wasn't sure
that's embedded in my head forever.
I'm not sure he would have selected that.
He chooses it.
He liked that.
He is very careful about the music he plays when he shows up to his rallies. So, yeah. Oh,
that's a thing. I thought it was like one of those slightly mocking things that someone had dubbed over.
No,
that's a thing.
No, that's his thing. I guess channeling his Studio 54 days from the early 1980s or something. I don't know.
Is it Studio 54? 55?
Was the big disco? Yeah, Studio 54 is the big 54. New York disco where he would have hung out.
Gotcha.
As a young man with bad hair back in the early 80s. So,
my pop culture references are weak, folks. That's I apologize. I should know more, but I don't. Anyway, so Trump is gone. I mean, but let's start. Well, we'll come on to a little bit to that, because I think there's some people got some thoughts about what that could mean in terms of Biden. I know we touched upon it last week briefly, but go on. The old triangle. Talk us through.
The old triangle, back to the China triangle is that's where, again, I'm not banging the table in terms of I think the headwinds that we're going to face in the nickel market this year is really on the stainless side, because 2020 was a huge growth year, but we're going to see in 2021 a bunch of nickel pig iron, more nickel pig iron production coming on. So whereas the non-stainless side was all bullish, the discounts for ferronickel widened as prices for LME nickel went higher. So for me to get very excited about a major move higher nickel prices from here, I'd want to see both the non-stainless and the stainless market really responding. So the good thing is it's not bad. This gap open was just because LME prices went higher. It wasn't because NPI prices were dropping. Stainless prices have been flat. And again, going into Chinese New Year, where people, I think, probably more comfortable that they've got enough stainless and got enough NPI, given again the supply that's coming down the pipe. The fact that it's still staying flat is a decent sign for the year. So, again, I don't think there's much downside risk from here, but I'm not sure that the non-stainless sector alone is going to drag nickel, substantially higher from here. So I think it's, technical trading and we'll trade higher once we get through this level, but it's all going to be technical driven as opposed to fundamental driven for the next few months.
Okay, so demand side, Asia sort of talks upon it. I'm trying to do a really cool segue here. It's just failed. Basically, I'm asking what's going to happen in the US, because we're talking to a few US copper producers, right? With Biden coming in, we talked about the pipeline up to Canada being, shut down, right? Terminated or whatever, mothballed, however it's going to be positioned. What's it going to mean for U.S. miners now? Are the Democrats coming in good for new miners?
No. Again, this Keystone XL pipeline is a great example, as it's going to have a profound impact on Canadian trade going forward here. But and the thing is more again, you have a bureaucracy that are the people that manage and execute these permits. And in the U.S., they already move very, very slowly, because the way people disrupt the permitting process in the U.S. is, one of their key levers is they wait for the permit to be issued and then sue the regulator that they didn't follow their own regulations. So again, the fact that you now before with Trump for the last 4 years, you had somebody who was like anti-regulation, pro mining, pro open up everything, and even then, I would say, most mining companies did not see a rapid increase in the pace with which they got mining permits. Now that you have, a more green, environmentally friendly, president and administration coming in, I think the administrators are going to be okay. I can take the extra time. I don't need to feel the pressure to get this approved anytime soon. So I think you're going to see a real decrease in the amount of permitting that gets done, and then the pace of permitting is going to get stretched out even further, which creates a huge opportunity for those of us who aren't mining in the United States.
Yeah, it's interesting actually, because I think we get these questions sent in all the time, and some of the newbies to mining are saying, well, hey, they're permitted, so they'll be okay. And you're like, well, what's the permit that they've got? You need multiple permits and licenses, and as part of the EIA, there's multiple components to it. So you just got to understand what it is that they've got and what are the barriers to them in terms of the permitting process between now and getting into production. And there are many. So the question is, do you think that companies who have, who are already up and whether it be exploring or developing, not yet producing, are going to suffer, or are they okay because they've started the race and they'll be okay?
Well, if you're producing, you're fine.
Yeah.
That's,
but exploration,
that's, they don't reach, but it's the development stage. And again, in the US, we had a couple of great examples, sad examples, in the past 12 to 18 months here, just one or two, and I don't want to pick on any one company, but, Polymet had their permits. They were continuing to advance, and then the government pulled one of them back. One of the courts said, "Oh, that shouldn't have been issued." There's another company, Aquila, beautiful, VMS, copper, zinc, precious metal deposit, in a historical mining area, in the Great Lakes, and again, had a permit, had a court rip it back. So, again, I think for investors, the key thing to say is, okay, yes, getting permitted is a major threshold in the US, but, continue to monitor the support for that mine. Is it okay? They beat them back, and locally everything's gone quiet, and they're, the people who didn't want the mine, have gone on to another target, and, the local community's fine with it. And so, it will get through, and the chances of having a permit taken away is relatively small. Or are you in a place where you have active confrontation, trying to take those permits away, at a local level, at a state level, at a federal level, and if that's the case, then, always keep that in the back of your mind that, until the mine's up and operating, it's not up and operating.
Yeah, I guess we'll have to wait and see and sort of see how that plays out over the next few months. I guess in the States, but I guess there'll be a few nervous US focused explorers and developers also waiting to see what the impact will be on them. So at best, probably delays. At worst, no decisions, no movement. Yeah,
or even worse, having previously granted permits over the last 2 or 3 years, pull them back.
So, okay, crikey.
Yeah. And the dichotomy is going to be, again, the sort of the Green New Deal that, the Biden administration is putting forward, is going to be, huge demand for both, for copper, nickel, all the battery metals. It's going to create a real, significant chunk of additional demand growth on top of what we're already seeing from China and Asia. So, it's very bullish demand wise. And then the other part they're going to have to wrestle with is, the one part that you saw actually bipartisan support for in Congress was local sourcing of metals from sort of the United States, and not dependent on China for, a big chunk of the period. The reality is they are dependent on China for a big chunk of the periodic table. So, they wanted to develop local supply. So that's the part that'll be interesting to see, whether, they find a balance that, we will permit good mining projects, because we do want to develop local sourcing, it'll be interesting to see sort of what side of the administration wins out on that front.
so many things. It's like, how do you define what good is? Does good equal lots of jobs, or does good equal it's a good mine, or it's a good asset below the ground? In which case, how do they quantify that? Do they say, well, actually, given the Green New Deal, we are going to be okay with any battery minerals, but everything else not so much? Or is it a case of not in my backyard, but we do want the Green New Deal and people have got to start using EV or nuclear or whatever, however they determine what Green New Deal looks like?
Yeah, no, I think it's three dimensions. So one is the commodities focus. So, if it is one of those strategic metals, so, rare earths, uranium, battery metals, that kind of box that the US is import dependent on right now. That's one box that'll be helpful. The other part is, again, in terms of economic impact, if it is going to be a substantial source of revenue and jobs, then, that will get some priority. And then, the third part will be the environmental impact. That the tricky part is, why you struggle in the Great Lakes area is that, there's unfortunately a lot of old mines there, and old mines that tended to leave, some fairly nasty footprints, and the people who choose to live in the Great Lakes area like the fact that it's wilderness and want to go fishing and hunting and that type of thing. So, they don't necessarily want mines in their backyard. So, that specific location and the relative environmental impact relative to what's there already is going to be another critical box to be able to check.
Oh boy, politics. Hey, and talking of politics, I see the EU has filed complaints about the Indonesian ore ban. It's all kicking off. That'll be really interesting to see sort of how that plays out. The reason they're doing it, because again, people might say, well, why is the EU concerned about that? But the way it's worked in Indonesia is that the Indonesian local ore producers don't get effectively a market price. They don't say, okay, well, the Philippines are selling it for $80. Therefore, you local Chinese plant need to pay $80. There's kind of a made in Indonesia price, which provides because they can't sell it anywhere else, it provides a massive subsidy to Indonesian stainless production, who are then, beating the crap out of, European Union stainless producers, who are the ones complaining to the EU. So, we'll see how that plays out. We know exactly what that, how that will unfold. Again, I think there's, I think what'll end up happening is there won't be any ban, but the WTO will let Europe put countervailing duties on exports of anything from Indonesia, again, which, with my Canada nickel hat on, opens us up to be able to, again, creates potential export markets for us, because they don't want or going to have to pay big export duties on anything that is coming from Indonesia. So I think that'll most likely be the outcome there. What's interesting is this noise came up at the same time. I meant to talk a few weeks ago. News story was fairly quiet. Tsingshan, has quietly sold their investment in one of the HPAL projects to one of the other partners in the HPAL project. So, HPAL, Tsingshan's pretty good about making money, and Tsingshan, I think, was looking at building a big footprint in the battery sector, similar to what they did in the battery material supply sector as they did in the stainless steel sector. So I think, not sure at this point whether it's a commentary on sort of the future economic success of these HPAL projects, whether the CapEx and OpEx, are going to come in kind of the way they were touted, or even they're being talked about now, which is substantially higher than where they were 2 years ago. Do they, again, if we make this stuff, we're going to get a 50% export duty on anything we try and sell to the EU. So let's just not, go down that path, because that's the one big, they've executed, perfectly from an operational perspective in Indonesia. But what they fail to recognize is market access. There is export duties on their products. Even China has export duties on Tsingshan stainless steel from Indonesia because of complaints from the local, the state-owned Chinese stainless steel producers. So market access is for real, and does enter into an equation. So
it'll be, well, I mean, we'll find out in the next 6 to 9 months here. I know how that's going to play out, but I think some very interesting developments in terms of what the supply structure could look like.
It's getting really, really, really exciting. Because again, we've talked on multiple occasions about, geopolitical risk. And this is probably going to be my best segue of the day. You ready?
Okay.
Ready? So,
all right, I'm holding on.
So, talking of macho men, Mark.
Yes.
I see Roberto Duterte, I've said that wrong, and that has bans mining in the Philippines. That was good, right?
Yeah, not the entire Philippines. He's picked on one island. There was a bunch of high-grade ore that emerged from there in the 2014-15, which was a surprise to the market. They've mined out most of that ore, but there are some mines there. So again, just curious as to whether or not he's just throwing a political bone to the environmental efforts in Philippines to show that he's concerned about it, or again we'll see what happens, because again if it benefits some nickel producers in the Philippines and not others, then to have less supply coming out of the Philippines to China, we'll see how that plays out. But again, just underscores political risk issues, in the industry in general. You should always pay attention. And then from an investment perspective, and again, the other big news this week on the political front was, Kabanga, which is a beautiful nickel sulfide deposit, was discovered more than 30 years ago. By now, it should not have only been developed; it should have been mined out by this point in time. It's in western Tanzania, up by the Rwanda-Burundi border,
nice.
And again, close to the Congo. So one of the more challenging political locations in the world. And to, again, to underscore how politically difficult it is, again, in the mid-2000s, we were desperately short of nickel, and the Chinese, even didn't go after Kabanga at that time, although it was owned by Glencore and Barrick. But a few years ago, the Tanzanian government basically ripped it away from Glencore and Barrick, canceled their permits for that operation, and they've handed it to a new entity called Kabanga Nickel. Tried to find the website, couldn't. And the government has passed a new law that the state owns 16% of any deposit. So again, we need every nickel mine. This is an operation that could deliver, a decent chunk of sulfide nickel, to the market. And sadly, we'll see what happens. Again, just further to the southwest in Zambia, you saw Glencore sell, one of their mining operations to the Zambian government for the sum of, $1. They're basically walking away, and $1.5 billion loan to Glencore, that they'll have to pay back. But again, I mean, whether the government actually ends up paying anything back on that front, but at least, Glencore has a chance to get some of their money out. It's political risk is real. And, again, do not, as an investor, never underestimate the risk of a particular jurisdiction.
But just going back to the Eramet project in Tanzania. So it's right on, Rwanda, Burundi, Congo borders, right? So so you look at Tanzania and go, that's a great country, great people, very stable, nice place to do business. I've done business there, invested money there. It's great. But if you're close enough to the borders of those countries. Now, the unrest, as it was a long time ago. It's generational, but it still hasn't come back, hasn't moved into any meaningful development or certainly production, right? So these things are long lasting. So it's what happens to people, because you're right, it's a significant asset. It's like a Voisey's Bay type level asset. So why haven't people gone back in there now, whatever that 20, 30 years later?
Well, again, to the extent Tanzania might be okay in other business sectors and mining. And again, it's when you're looking at a country's political risk, look specifically always at the mining sector. So the other asset that was part of that company called Sutton Resources, which Barrick acquired back, 35, 40 years ago, is a deposit called Bulyanhulu. And again, that has been, the government has tried to seize that from Barrick, all kinds of special taxes. We're preventing them from exporting selling any of their product for a period of time. So, again, every few years, if governments do that, it just scares off any real investors, to be able to put capital to work. And it's sad, again, going to the Zambia example, their production today, is just higher than it was back in the 1960s. They've got as much or more copper than Chile does, and Chile, I think, is producing 10 times, the amount of copper they did, in the 1960s. And again, in regions where they're just desperate for economic activity, desperate for revenue. The resource curse is real, and these are just examples of how this comes, comes to bear.
Yeah, thanks. So I think I referred to Eramet. I'm at Kabanga. Did we talk about Eramet?
No, I mean,
we should talk.
Yeah.
About
So the other piece of news around the political risk was, Eramet talking about, having to put their New Caledonian operation potentially into liquidation if the protests. We talked about the protests over the last few weeks, and they're continuing. And again, those protests are related to Vale trying to sell their stake in Goro. And it's just, people with other political grievances are using that as a chance to protest. And so, which it, basically had a big impact on Eramet's operation that's been there for, I think 100 plus years. And so, I guess that's, and it's a major source of jobs and revenue for the local economy. And again, I think Eramet's getting to the point where it's like, okay, we're going to walk away here because it's just too hard to generate any kind of return on the capital we're investing.
Well, there's another report we've done that you should read. We should. I'll send it to you. We did a report on Goro, which you might find interesting. And the one we were talking. So with guys, just so people, we were talking before the show about Nick Mather, right? So Nick Mather hunting for copper, Ecuador, just been forced out by the board. He was paying. Well, I think anyone in the club who's read the Salt Gold report we wrote would have spotted that we called this. He's paying himself a pretty penny. Took some money, which was quite expensive and perhaps not necessarily the way that everyone wanted it to happen. Been forced off the board. So, mining's fun. There's so many ways CEOs manage to screw things up. It's brilliant. I love it.
Yep. Oh no, and that's the part, right? Is again, as an investor, you can never be too picky. If you look at, again, look at the guys, look at the people who are managing, big pools of capital in the resource space. They're not doing a deal a week. They have lots of capital and they're very, very picky and choosy where they deploy that capital. And they take a look at everything. They choose to invest in very, very few. And again, as an investor, you should be equally
selective,
careful with your own money.
Absolutely. Absolutely. Well, we do say I have little mantras which I keep banging out every now and again, and I always say to people, someone writes to me this morning, I'm frightened that I'm going to cash in some of the money I made on precious metals, but I'm frightened I've got nowhere to invest it. Like, okay, don't worry. There's always deals. There's more deals looking for more money than exists. That has always been the case. So don't worry. Take your time.
I know. And the other key piece of this is, and again, one day maybe, I'll, get to run a private equity pool of capital. But, the great thing about mining versus other industries is because it's so cyclical, every 4 years, you end up with a 60 to 80% off sale, so there's nothing wrong with sitting on, when prices are near multi-year highs, it's not a bad time to have a little cash in the bank, because there's a point in time where they'll be back at multi-year lows and things will be far cheaper at that point in time. So,
well, there we go. What a romp. Actually, I said at the beginning, it's been a quiet week, another quiet week, but not too bad. There's things, there's always things going on, always things to take note of. And I sent you we've just started this weekly notes section, our analyst notes. Did you get a chance to look at that? You should look at that. Okay.
No, this week's been last week and a half has been pretty nutty busy, but I will take a look. Yeah, a few press releases and stuff.
I hadn't spotted. No, of course. If you get a quiet minute at the weekend, it gives you feedback. In fact, that's everyone. Give me your feedback, because we're trying to work out the format for that. It's going to be weekly. Here are the things that caught our eye, type things. So we don't want it to become one of those boring broker notes where there's banging out just generic waffle. So everyone feedback on that, please do. Mark, as usual, brilliant, insightful, love it. We shall see you next week, shall we?
Sounds good, sir. All right, take care.